Thank you so much, Mr. Surana, for joining in. It's been very volatile when it comes to crude oil prices from 85 to 97 and then again seeing a retraction. Just give us a sense as to what the outlook is in light of the backdrop that things are very volatile as well when it comes to the geopolitical situation.
Good morning and thanks for having me on your show. So as you rightly said, the crude prices had from 96 to 85, almost a 13% drop in last 2 weeks, a type of volatility which we have not seen in this year at least. The volatility has been a part of the game otherwise. And basically 3 or 4 factors had been working on the play. One is definitely the recent Israel-Hamas conflict. So it has raised a war premium on the system. Initially, the crude prices started climbing after there was a rollout of the production cuts. Then after that, it started subsiding because of the demand concerns and the concerns regarding the soft landing of US trade trades. And then again, it spiked after the conflict raised in Israel. And now again, it is started cooling down because of the weaker demand projections which are coming. There are 3 factors which are coming into play. One is the demand concern. Second is the conflict in Israel. And of course, the Ukraine-Russia war conflict which is coming, which is going on. And it has got that price cap issue. The recent in the thing is US has put a sanction on first time on the shipper line on transporting Russian crude above a cap price. So these are all the factors which are working on that. Going forward, I think that many of these news are flowing in on day by day, the way it happens, how the conflict raises in Israel, if it remains restricted to Hamas and Israel or it percolates further, which draws further part of the Middle East countries in the system. As such, Israel is not a producing country, but it is very near to the critical infrastructure and the states or homes where almost 1/3 of the total oil consumption in the world passes. So, and of course, there are further geopolitics issues. Whether the Iran-US rapprochement, which was looking at the horizon, which happens, the Israel-Saudi Arabia rapprochement, which was happening, or Iran-Saudi Arabia. So all those geopolitics will play on this. But we expect that the prices should be moving between 85 to 90 range for some time. And subsequently, it should cool down to lesser than 85 if nothing further serious happens.
Okay. Mr. Surana, now I look at this more positively, which is that crude has gone through its stress test. If I may use the Hindi word, Agni Pariksha. Whatever could go wrong has gone wrong in the world in terms of geopolitical crisis. Russia, Ukraine, now geopolitical crisis between in Middle East. And yet crude is below $100. And on top of that, OPEC has already cut the production. Yet crude is below $100. So can I say that below $100 is actually the new normal for the crude?
Of course, it will be wrong and no-wise to assume that whatever was to be seen in crude has been seen, because the people have been proven wrong a number of times in the past if you see the 100-year story of the crude. But one thing we can definitely say that the situation today is quite different from what it was earlier. So if we see the earlier time when the crude has crossed $100 and all of a sudden, then the whole thing was depending on the demand supply of the crude basket only, and the mercy of the producing countries and the pressure which the consuming country can put or not put. But today the scenario is not the same, because there are alternatives which has got developed over a period of time. Earlier, we never had this situation that we got the alternative energy and the crude getting threatened by the alternatives coming in, or the motivation for the people to develop the alternatives faster just because the crude prices are going up. So at that time, the only concern used to be whether it will be demand destruction because of the higher crude prices. But today you have got alternatives also coming in, and higher the crude price, more will be the motivation to develop those alternatives. And in that case, it will be a permanent destruction of demand for the crude oil. So it is important for the oil producing countries, and they understand it well, that there is a limit to which the price can remain, or the consumption can remain inelastic to the price. And therefore, I would assume that it will be, to some extent, it will be right, subject to correction, that the less than 100 is the order of the things and above 100 is unlikely, at least with the way we see it today.
Why have GRMs plunged? Even though crude has been volatile, GRMs have come to a multi-year low. Is that an indication of disruption in demand?
So basically, two, three things that, in fact, the GRMs had been high. In August, there was quite good GRMs and the diesel cracks were quite good. But now what is happening is the export quota from China, the way they are rolling it out. So more and more products are coming in the market. The second thing is there is a east-west arbitrage on the diesel, at least the Indian diesel going towards Europe. Now, but going forward, I assume that the stocking would have been done for the winter. The winter is expected to be less colder than what it was expected to be. The demand concern still continues to be there. The US Fed rate soft landing continues to be a concern. And the different projections which are coming, including the yesterday projections from IEA, they are slightly less aggressive than what it used to be once upon a time. It is not at all aggressive, rather it is a bit softer. And so definitely there are demand concerns. Second thing is that China's demand recovery is not very, very clear to the people as of today. And the war premiums and the resilience which has been shown so far in absorbing that, it is one issue. But the one more important issue which we should be noting is that whenever there is a war-like situation, the speculatives will try to cover their risk. And if you see some last week, starting October, there was a massive sell-off of the futures. And that has removed the speculative element from that. It only shows the influence which the speculators have on the oil prices now. And it can move the prices up and down depending on the news flow. Otherwise, fundamentally, the things have not changed to that extent. Fundamentally, the situation remains slightly bearish that there is a demand concern. And there will be a limit to which the OPEC plus will be able to cut down their production to balance the prices. But I will assume that 80 will be the thing which the people will try to focus on. The producing countries will try to support their base at 80, and anything above 80, the consumer countries will have the stress. And overall, the inflation guided by the oil prices, which may further have a problem on the world economy. So all those concerns are definitely there, and which should push or keep the crude oil prices somewhere in the vicinity of 80.
Okay, so if MK Surana, the investor, has to buy OMC stocks in India, will he ever buy them? Frank
Repeat the last
opinion.
line.
If MK Surana, the investor, has to buy OMC stocks in India, will he ever invest in it? If yes, why? If no, why not? You can give me both the options.
This will be a bit biased answer, but two things I can tell you. That the refinery GRMs in the last quarter should be good in my opinion. And therefore, the OMCs should be in a position to give good results as far as the last quarter is concerned. But at the same time, the diesel cracks the way they are and the GRMs which were there, let's say in August, will not sustain in the next quarter also. But the Europe and the Western countries, there is an opportunity for India, especially in the export markets and at a reasonable prices. And therefore, the refinery in India, which is diesel dominated and diesel cracks being strong, I think there is a reason, and it is all a comparative and contextual manner, that currently the OMC stocks are good. I can't say on the long-term basis.
Thanks for being candid and sharing with us your views. Good to get in a perspective from you as well on the movement of crude oil prices and their impact on the sector as a whole.